Mayuresh Joshi joins us, fund manager with Angel Broking. And Mayuresh, before I come to you, I want to look at the ET Now Fear and Greed Index. In the morning, we talked about the Fear and Greed Index being in the dangerous territory. Now, this is an indicative tool. This is not a perfect indicator of what you should do. But this tells you the market positioning, how things are weighed on one side. Everyone is on the same side of the board. We can remain there for a long period of time. So this is not like a absolute indicator or the ultimate ultimate benchmark of what markets would do tomorrow. This is just an indicative or a tool which you should move when you are making a buying or selling decision. Mayuresh Joshi, are you getting a sense there is a bit of a greed which is there in the markets now?
Afternoon, Nikunj. Obviously, I think after the mandate that the government has received and the expectations of the market of political and economic reform stability continuing over the next few years, the kind of run-up that we've probably seen in stocks has been humongous. Secondly, I think valuations are on the higher side looking at the earnings trajectory that is getting laid out so far. So yes, I think if one really talks in terms of a earnings parameter and an earnings perspective, the market's probably a little bit stretched at this point of time. Third, I think the liquidity and sentiment is extremely strong even at this juncture. There are huge flows coming into mutual funds, life insurance money is flowing through, and foreign institutional investors or foreign portfolio investors probably are looking at India among the emerging markets as a very sweet spot, at least from a short to medium term perspective. So I think if you focus and combine all these factors together, I think the momentum has been quite strong. Our valuation on the higher side, absolutely yes. Is there a chance for the markets to correct? Absolutely yes. I think if the markets correct from the current levels, my own sense is that with the flows that are coming through in the markets, qualitative stocks with reasonable valuations will be lapped up very, very easily. So I think it's going to be more a stock specific approach from here on, where the earnings trajectory has to be extremely strong for the stock and valuations have to be reasonable. So I think it's going to be a stock pickers market at this point of time, Nikunj.
Right, Mayuresh, let's talk about the primary market space. We've had MBL hit the secondary market today and at a decent premium. So your call there. Add to that the expectations from DMart next week.
So afternoon, Tanvir. I think the opening for MBL has been quite strong and all the parameters were working in its favor. So the kind of subscriber base that it has got, 49.6 million compared to the market leader ENIL, I think it is still higher compared to the kind of market that it operates out of, 20 markets compared to much higher market share for ENIL. However, on the revenue market share front, it is neck to neck, close to 23% with the market leader. The advertising volume growth has been substantial and the kind of rates it charges is a testimony to the fact of the operating margins that it commands. Even in terms of an earnings perspective, the top line over the last 3 years has grown at 19% compared to ENIL at 14%, the bottom line at 56 odd percent compared to 17%, and the valuation before the IPO was launched were quite attractive both on an EV to sales parameter as well as an EV to EBITDA parameter. Now, how does the radio business look from here? I think it looks reasonably placed at this point of time, and with new stations expected to come through specifically for MBL, I think the subscriber base itself can go up substantially, which can mean additional volume growth in terms of advertising revenues coming through. The revenue market share can be expected to inch up as it launches new stations, and the cash flows has remained extremely strong for MBL. So for FY16 as a whole, operating revenues close to 227 odd crores, operating profits were close to around 77 odd crores and an EBIT margin of 34%. Whether they'll be able to do that, the management is confident. So again, I think the stock has moved substantially post its listing, but I think the numbers will do the talking here on. I think if they're able to maintain the numbers at least for a couple of quarters, the stock can very well justify its forward valuations, which can be expensive even at that point of time.
It's going to be a bumper listing Tuesday morning, and book your front seats because we expect the who's who of Indian stock market to really attend that listing, and we would be having a special coverage on the DMart listing on the channel just to showcase that what a grand event it is going to be. there's some comments coming on GST, and I'll wait for the flashes to load up. But because there's more and more clarity which is now coming on GST, ITC is flaring up. We've seen strong price action already in HUL. Mayuresh, a moment ago we were discussing between HUL and ITC after the current, at the current levels, which is a better bet, which offers better value.
Now again, Nikunj, I think one really needs to be specific, and as the Indian consumption basket is expected to grow over the next 2 to 3 years, let's forget the last 2 quarters, demonetization and remonetization, which saw a huge hit in terms of volume degrowth and pricing cuts being taken, more discounts being offered, dealer credit being extended. So I think all that took a toll in terms of both the top line, the EBITDA and the bottom line as well for these companies. But going forward, as the Indian populace moves from an unbranded to a branded perspective, and as the discretionary income increases over the next 5 to 10 years, Indian consumers, specifically on the semi-urban and rural sides, are going to move up the value chain. Having said that, probably a lot of the consumer-facing stocks, whether they be consumer staples, FMCG stocks, are expected to benefit significantly. So I think HUL has probably lagged behind in terms of competition intensity pressures coming through, as well as pricing pressures coming through, and most of their key segments probably did see some sluggishness going forward. So I think for the FMCG pack as a whole, I'll be a little bit more selective at this point of time. Economy probably looks like a very prospective good idea to us, but again on decline because the valuation is probably looking on the higher side. Between ITC and HUL, again I think ITC's cigarette business has held up, and with the kind of announcement that the government has made specifically on the GST front related to cess, I think they're probably positive in terms of sentiment news flows for ITC. So largely again I think the other businesses need to contribute much more because the cigarette contribution to EBIT is still substantially higher. Paperboards, hotels did quite well in the quarter gone by, but again I think the other FMCG business has to contribute, and as utilization levels start picking up for the hotel part and the agro trading part, I think the sum of parts would look very, very interesting. So at this point of time, ITC is a clear hold.
Okay, thanks for that perspective, Mayuresh. Just stay on with us. Pranay joins in to talk about the stock of the day, and it's M&M Financial. It's actually had a decent run this week.
Yes, Tanveer, it's actually extending its gains for the 4th session. So all days of the week it's gained, but it's actually seeing very strong short covering in today's session, which is why it has managed to beat the earlier stock of the day, that was ITC, and that too on very, very strong volumes, highest in the last 4 months, which is why if you pull up the stock chart, you'll see that it has now climbed to the highest level since November, and that too it's touching the 200-day moving average right now. Even on the F&O side, it is the best performer with an open interest of about 5.5%. The reason why you're seeing such a strong short covering is because, just a couple of days back you had seen SBI coming out with a waiver for farm or tractor loans, where they said that they were ready for a one-time settlement, and the management was asked if they were also considering the same when it came to M&M Financial. So they said that they would rule out any such scheme. They've never had it before. They don't think of having it. On a customer-to-customer basis, perhaps they may consider it, but the farm sentiment has improved significantly after remonetization. So things are getting back to normalcy. The earlier concerns which were there on asset quality are receding right now, and therefore since the crop prices are improving, the sowing trends are also good. They believe that this improvement in sentiment will lift the numbers going forward, but at least the concerns are not that high right now. Not just that, they said that the passenger car financing has actually managed to do very well at a time when tractors had been hit in the last few weeks. Passenger car financing in rural markets has been very strong, so they've been financing a lot of Maruti Suzuki cars. That's what the management said.
Okay, thanks a lot for that, Pranay. Reliance, sorry, Reliance Capital. Extensively discussed Reliance Capital in the morning. I just want to mark that stock. 8% is what it added yesterday, and on your screen, 1 rupee down, flat, no reaction post the analyst meet. Buy on rumors, sell on news. How many times you've heard me say that? Well, several number of times. I'll say that again because exactly that is happening. If you bought Reliance Capital yesterday ahead of the analyst meet, you made money. If you bought it after the analyst meet, you've not made money because the stock already has seen a run-up of more than 30% from the recent lows. It's a cheap stock, but I like what the ADA group is saying. I mean, they are simply talking about better capital allocation. And ultimately, if companies have a better capital allocation from a stock market standpoint, that's excellent news. Can they achieve that? Time will tell. But for the moment, the intention is there. Earlier, the intention was also missing. Well, earlier this week, I also spoke to Nilesh Shah of Envision Capital, who believes that The political mandate will ensure that there are long-term, stable and market-driven reforms which will ensure that Indian markets, even though they are ranked outperformers and they're trading at a premium, that position is unlikely to change.
I think some of the mainstay remains. I think in terms of consumer, I think that remains, I think, the big thing. So going forward, the way, as I was earlier also referring to, this whole switch from unorganized to organized, I think has the potential to play out significantly by 2022.
Give me an example.
So I think the entire building product space, I think out there the opportunities are significant. I think housing itself, where of course that seems to be now becoming the flagship program, so to say, of the current government. And if you really look at the news flow from 31st December onwards, all the big announcements, I think there have been so many big announcements on housing. You could call that affordable housing or housing, but I think that's one space. And then with RERA coming in, it's a space which is going to get regulated, which means unorganized local players will find it very, very difficult to operate in this space. And I think that itself can be a significant opportunity. So the way I think a year back, maybe unconventional wisdom said go and buy metals, and I think very few people would have done it. I think maybe this time around something like that could be a great proxy to play.
So buy real estate stocks, as simple as that.
I think within that, I think the housing kind of companies, I think especially companies which are more towards the mid-income affordable housing, I think that's one segment to play out for. A good proxy to that would also be some of the cement stocks.
I
think they are expensive, but I think what we need to keep in mind that the capacity utilization still out there is yet 65 to 75%. So maybe over a 3-year time frame, if the housing activity picks up, then maybe cement is one great area to kind of look at. In addition to that, some of the other consumer companies, like say for example the apparel players, the appliances kind of companies, they I think would be huge beneficiaries of some of the other things, like say the digital economy kicking in, direct benefit transfers kicking in. I think a combination of all of these, be it digital, demonetization, GST, direct benefit transfers, I think all of this, or the Ujjwala scheme, I think all of these put together, I think really make a good recipe for some of these consumer companies to kind of play out over the next 3 to 4 years.
We've always argued that you should sell PSU banks and buy private banks. And for those who followed this simple trade of value migration, where PSU banks were losing market share, private banks were gaining market share, they've made serious money.
Yes.
But is it time to reverse now? Because if the economy picks up, PSU banks will also recover.
I think the biggest challenge for PSU banks yet is going to be capital. The asset quality woes continue. We really don't know how long that will still last. It's quite possible that this quarter or this financial year could be really the end of the asset quality woes, and probably after that you would not see deterioration and maybe a gradual improvement. That's, I think, a best case scenario.
Okay, that's Nilesh Shah talking about his market opinion and particularly how to look at PSUs in this market. They've had a strong dream run, at least from the start of the year till now, and that continues. Let's quickly go across to Darshan Yathan and get a sense of what dealers are recommending in the 30 minutes of trade left. Darshan, you go first. What is it that you're hearing?
See, Tanveer, it's been a day where the Nifty actually hasn't moved more than 10 points. It's been pretty much at that level. So there's nothing much to talk about. But individually, some of the counters in which there is a little bit of activity. First of all, Jet Airways is something that dealers are talking about. It's been a while, and after a while, Jet Airways now comes out of the F&O ban. Over the past few days, we've seen a lot of positive news coming in as far as the aviation sector is concerned, even in terms of probably allowing 100%, a foreign airline to own 100% stake in India. So a lot of these things have been spoken about. So airline as a sector is being spoken about in dealing rooms. Apart from it, Jubilant Foodworks is something that dealers indicate. Today it's a little soft, but over the past 2 or 3 days, some of the FII buyers have been accumulating Jubilant Foodworks, and they haven't been very aggressive, but at lower levels they are accumulating this counter. And Syntex for one is in focus. There is a buzz of a possible corporate announcement that could come in the counter very, very soon. That is something that dealers are keenly watching out for.
The date should be coming out very soon. Yathan is also ready, and let's get some closing comments from him. So Yathan, what are you picking up? What could be a good idea to buy in next 10 minutes and sell it on Monday morning?
nothing of that sort. It's not easy money in the markets, especially in the market when you are at the top. But Torrent Pharma, that is one stock wherein a lot of domestic fund action is there in trade today. In fact, the stock is up 6% on decent volumes, and today domestic funds are said to be aggressive buyers in Torrent Pharma, and that is one stock wherein dealers are recommending holding long positions. Also Bharat Financial, remember the stock is under F&O ban, so you cannot create long positions or short positions in the F&O segment, but in the cash segment we have a lot of these domestic funds and HNIs accumulating shares of Bharat Financial, so that is one stock wherein dealers are recommending a buy in the cash segment, 3.5% up for that one. And Idea Cellular, that stock has seen a sharp crack in the last 10-15 minutes of trade, but what we gathered that a lot of FIs have kept orders at lower levels, and there is accumulation happening at lower levels, so the stock can probably find support at 105, 106 levels. So dealers are recommending accumulation at lower levels, of course with strict stop losses, given the fact that they are playing this for the trading swing.
Okay, thanks Yatin for that. Let's get in closing strategies at 3:20. Siddharth, I'll start off with you. What is it that you'd recommend?
Sort of 3-4 stocks which I spoke in the show. I think Infosys is the top closing bet for me. Clearly, stock has shown a breakout, and after we spoke, it has built some more gain and is challenging that 200 DMA. I'm quite optimistic. Even CNX IT index is showing strength. So other names, in fact, one of the mid-cap stock, if I can say one more stock in this space, it's an IT technology. We saw huge volumes yesterday. Volumes are phenomenal today as well. Yesterday it was a bit soft, and IT tech is showing signs that it can give a clear breakout from current levels. Even that stock I would suggest traders to be long in.
Kunal?
Tanvir, I would want to reiterate Jet Airways. I think the stock is looking quite attractive. It's closing at 470, 475, 478 zone, which I think could probably confirm the 200 moving average breakout as well, which I was discussing earlier. So recommending or rather reiterating a buy on Jet Airways with a target of 505, stop loss at 465.
Dr. Narayan?
Well, I would do a BTSC in Havells at the current price of 442, stop loss 436, tomorrow looking for a target 450 plus.
Then we just notice that airline stocks are doing rather well, and why not? Crude prices have collapsed from the recent. A variety of factors why crude is down. We are marking airline stocks right now. SpiceJet 83, high beta, one of the best, one of the lowest cost airline. Their efficiency rates are much higher than Indigo. Indigo may be having a lot of market share, but in terms of efficiency, I think SpiceJet is also right up there. 919, you try and book a ticket, which I was trying to do for my parents in the morning, Delhi, Mumbai. It's chock-a-block, 6,500. These are not very cheap rates to fly, which means that airline companies are now enjoying a pricing power and crude prices are coming down. So higher traffic, better realization or better realization per seat, and crude prices down. So it's like a twin gain, so to speak, for some of the airline stocks right now. Mayuresh, everything is going right, certainly for airline stocks. Buffett himself is buying airline stocks. I mean, that's the biggest endorsement of what's going on there. Yet airline stocks are not really making investors very happy.
And the obvious reason again is the wide variation in crude prices. So as crude prices go down, there is an obvious improvement in margins that can come through, and vice versa. But there are a lot of ancillary costs associated with that. So I think crude forms almost 25-26% of the overall raw material cost or the input cost for airlines. You couple that up with the SGA expenses, the lease, which is almost 8-10%, employee expenses, maintenance expenses, depreciation on the aircraft that they probably use, and you're left with very little cash flows probably to grow on a compounded basis. Secondly, if you look at the core parameters, and again demonetization would largely be to blame with this, the revenue per average available kilometer or the overall yields per passenger had degrown significantly, and there is competition. So I think though rates might be a little bit high in a few sectors, I think the load factors also were quite high for the quarter gone by, though I think realizations hit them hard, and the crude prices. So there are too many variables that move for airline stocks, and I don't think a compounded story becomes visible and viable in terms of how growth and earnings can come out on a consistent basis. The earnings are lumpy for airline stocks, and they shall be. So again, I think from a trading perspective, these stocks can be looked at. Fundamentally, I think I'll still give it a pass.
Okay. 477 for Jet Airways. Siddharth Bhambre. Still 10 more minutes left. You can keep the phone down. Let's talk markets.
So the stock is in my personal portfolio, and I've been suggesting to go long since quite some time. Kunal mentioned since last 2-3 trading sessions that this stock is looking good, and I would second his opinion. I have medium-term targets probably more than 550, 580 levels, and I'm expecting Jet Airways to do well. People who have missed out, I think even at current levels they should not shy away from airline stocks, and because Jet Airways is there in F&O as well, so clearly there is a data which is stating that the kind of positions which are getting formed in Jet Airways, it's not happening for 10-15% move. I think we should expect a much bigger move in this counter in coming week or probably months.
Yeah, it seems like it. This one is holding out quite nicely, and I think we're seeing a bit of a rub-off generally in the aviation pocket, but Jet Airways is the one talking point in that segment, 477 and counting. I just want to quickly wrap up with Dredging Corp before we start winding up the market. A couple of minutes to go for that. 8% higher. Dr. Narayan, 678, and I know that this one has been on your radar, but what's the call from here? Just in moments before close.
Well, you're talking about Dredging Corp?
Yeah.
Well, I think in today's session we have seen some supplies coming at higher levels. So it seems that the stock has moved up pretty sharply. The last 3-4 sessions I've seen it move from some 500 to 600 in almost to the vicinity of 700. So I think with profit booking emerging at higher levels, maybe it would be more prudent or sensible to wait for some more pullbacks in order to sort of go long into the stock. We must create long position, of that there is no doubt, but the whole question is what is the correct price to buy it. I don't think after such a spirited run of the last 4-5 sessions, one should be in any haste to make long position at this juncture, particularly in the light of the fact that selling is emerging at higher levels today.
Okay, Bharti Airtel, and day before yesterday there was a note out on Bharti from CLSA. I think they have indicated again that there's every reason to believe that for Bharti the margins will remain subdued. We also had a comment from the CFO of Bharti exclusively at about 10:30 on the channel, 11 o'clock at the channel, Gopal Vittal, very exclusively indicated to us that this kind of a price war is not helping anybody, and these are desperate times. Also, what is creating pressure on Bharti is the fact that Reliance Jio has been successful. I mean, there were doubters who said that will Reliance be able to roll out their service successfully, but they've not only gained market share, they're also claiming that their ARPU positioning is significantly higher than the incumbent players. So Bharti is feeling the heat. Idea, on the other hand, because it's a special situation stock, has emerged as one of the best performing stocks in the Nifty. So it's a story of two stocks, Idea versus Bharti. Idea was up 7-8% I think on Wednesday. Today it may be down, but in generally telecom I think is a very special situation case. Bharti is in serious underperformance mode, so to speak.
Actually, the entire telecom basket, it's just you have to see actually which side of the bed you wake up from, because that's how the stocks play out. One day up, one day down, a bit all over the place. But Idea, ahead of that much anticipated deal, is seeing some more downside risk. However, broadly, I think the range remains for Idea at between 105 to 115 odd, but down about 4.5% in the session, and that's nearly 3 crore shares traded on Idea Cellular today. Let's start wrapping up the market. It has been a good session in trade. 91.55, a record close for the index once again, even though by a few points here and there. I mean, I would say that this would be an impressive close, not just to today's session, but also to the week's trade. And for the broader markets, goes without saying that it's been a decent show. You're looking at that getting reflected in the bank nifty. Today may not be a very aggressive day from the index, but it has seen better times in the week gone by. 21,234 coming in on this one. And drill it down to specifics, I think aside of the index, the only one that grabs the headlines is ITC. There's decent traction seen in Infosys in the last half an hour of the session. HCL Tech, all that buyback buzz is creating interest in the stock. In fact, that's a rub off a broad theme for the entire IT sector, and that doesn't go away. So played essentially with that news development in mind. Among losers, I think Niku just highlighted telecom as a basket has been sluggish. You have the entire financial space which has not been up and active in the session today. SBI, ICICI Bank, Yes Bank, a bit sluggish in trade. Bank of Baroda also losing ground. Tata Motors, DVR a bit weaker. From the broader markets, as we draw towards a close, last 50 seconds, just want to mark Dredging Corp. Great run for the stock, not just today but on a period chart as well. Extended timeline, good performance. There's of course VST Industries, which is up 6.5%, not a very liquid stock. Sadbhav Engineering has had a good run. Be mindful of the move in aviation led by Jet Airways. Good run for that stock as well. Torrent Pharma is a key gainer. These are some of the volume plays that I just want to highlight. M&M Financial is done. Infra has been a key performer. Nikunj had flagged off realty stocks. They have seen momentum over realty, particularly picking it up in trade. ABG Shipyard, Mandana Industries, some of these liquid names have contributed too. Torrent Power has done its bit as well.
Well, let's not lose sight of what Nifty managed to achieve on Tuesday morning itself. New high, record close, a week which I'm sure the bulls would like to remember, and they will not forget easily. Now, so where do we go from here is what I want to ask our technical experts and even Mayuresh. What is in store for us next week, and let's say for next 15 days? Starting with you, CK. It's a week which I'm sure will be remembered by bulls with all the glory. But where do we go from here?
Well, it is certainly a week to celebrate on for the bulls. I mean, particularly if you are a bull, because the index did notch up new gains. And what I'm heartened by most is that even though today we had, let's say, a negative day, we opened higher, pipped that 9200 and then closed near about the lower end of the day. So it might seem bearish in that context. But I think you have to view today's trading in the context of what has happened across the whole week. And when you see it in such a manner, you will find yourself to find the picture still quite encouraging. I think what the market did is opened up with a big gap, held on to that gap all through the week, and surrendered a very marginal amount towards the end of the week on perhaps this Monday to Friday kind of traders squaring up their longs, etc. I don't believe we will see this slight softish action of today when we reopen for trade on Monday. Next week ought to be considerably better, in my opinion. I think shorts are still there in the system. The longs are getting built. We are seeing that the FIs as well as the others are increasing their open positions in the index futures. The option protections are there. Call IVs are small, so a lot of participation coming in from there, as Siddharth has also mentioned and recommended. I think breadth of the market is pretty decent. Most of the stocks are holding on to the gains. I don't see any reason to turn bearish. Forget bearish. I don't see any reason to turn even slightly negative on this market. So blue skies still, and we hope for bluer skies in the coming week.
Yes, we do hope for that. Siddharth, come to you. How would you summarize trade? How it lays ground for the coming week?
Tanvir, a couple of weeks back I was talking about, if you joined on a weekly chart of Nifty, if you joined top made on 5th of March week of 2015 and 9 September 2016, then you get a slight downward sloping trend line, and last week we were talking that we might tend to breach this trend line and go higher, and this week that has happened, and this has happened with a gap. So generally in technical parlance it is called a breakaway gap, and this kind of movement leads to substantial upside from current levels, and statistically also that is getting backed by what FIs are doing in a market where they are buying put options and they are buying index futures, which as a strategy is called put hedge, and whenever these guys have done put hedge there has been meaningful rally in our markets. So I think it's a breakout and this rally has just started. I would suggest don't be in a hurry to book profit.
Okay, Kunal, Siddharth feels that the breakout is real, gains are here to stay, and one should ride their gains rather than exercising the caution?
Yes, Nikunj, I'm of the same opinion, and I would probably want to reiterate what CK sir said in the morning. Take a deep breath and definitely look to go long. I think looking at the markets today, especially Nikunj, there was hardly any sort of reversals. All we were talking of that there would be some sort of a price correction, but we hardly saw any price correction. All the markets are probably looking to do is that going to a time consolidation, which which would probably which is probably a very good sign, which I believe from a momentum perspective, because it doesn't die down the momentum as such. It doesn't give the opportunity for anyone who's missed entering into the markets maybe on the long side, or for anyone who's not cut its short position as well, which I've seen in a lot of stocks as well as on the indices. I think that opportunity is not getting done, so that aggression or that momentum would pick up anytime soon. So whether it's a left out feeling or whether it's ones who have not cut the short positions. So yes, I agree that you might see an acceleration of momentum going forward as well, and every opportunity in terms of stocks which are especially in high momentum, I think that should be taken with both hands, especially from a trading perspective.
That's a good looking chart. I mean, from the lows that we clocked last budget 2016, in Feb of 2016, from there the index has gained about 31%. We just want to highlight that because it's a complete U-turn in a matter of 12 months. Same time last year, there was a lot of circumspection, doubt, caution in the market, actually worry, I would say. But there's been a turnaround, and 180 degrees, perhaps even 360, like a full circle.
Market memory is very short. What were the concerns last time? I think the concerns were emanating because of that massive wealth erosion which happened in commodities, and the general view was that China is going to blow up, and the sell-off in commodity prices would have a very large impact on financial markets. That is behind us. Nobody seems to be talking about how emerging markets were on the verge of bankruptcy. Russia and Brazil, they were almost belly up in terms of the currency and what was going on with the economy. That storm also has subsided. Now that is what the markets have done. Now it's very interesting that if you bought on the day Prime Minister Modi got elected and you simply did nothing, you just bought it because you knew that day that the margin of safety was on your side and the downside was limited and restricted.